Anthem Biosciences IPO. The allotment is out now. You might have got an allotment. Anthem Biosciences IPO saw a stellar IPO performance. The IPO was oversubscribed up to 63.8 times. The QIB subscribed 182 times. But the questions remain same. What to do with the IPO? Whether to sell it, hold it, or accumulate more. So in this video, we are going to talk exact the same thing. The post-listing strategy. What to do with it, how to do it, and what are the strategies I am going to follow with my allotment. If you are new to this channel, I am Harshi Shetty, AMFI registered mutual fund distributor, investment mentor, coach, founder of WhatsApp-based investor community with over 2000 plus smart investors. Do not miss out to join my WhatsApp community. Link given in the description and pinned comment. Do follow the link and join my WhatsApp channel. Since we have already done a review video on this, let's talk only about those factors which helps you to decide on whether to sell, hold, or accumulate this stock. So watch this video to understand the clear strategy on what to do on the listing day. Before we go into the exact strategy on how to deal with this IPO, let's cover up some of the basic details. So here are the basic details of this IPO. The total IPO size is 3,395 crores. The price band is 540 to 570 rupees. This IPO is fully OFS, offer for sale, which means that not a single rupee is going to the company. Every single rupee which is being raised is going to that shareholder who is selling his shares. So what about the subscription figures? Here are the subscription figures for you. The QIBs let this show for the stellar performance of this IPO. They subscribed 182 times. The allotments were very competitive and only those who are lucky got the allotment. Now comes the very important part of this IPO. The financials, growth and valuation. The ROE of this company is at 21%. The ROCE of this company is at 21.8%. EBITDA of this company is at 32%. The net profits were at 8%, which is on the lower side, but these are very strong financial metrics, especially for a biotech company which is scaling up aggressively. So how is the growth of this company? The company is being growing at a 32% CAGR since last 3 years. The only small concern is about the net profit margin, which is at 8%. While the top line figures are exceptional, the margins are facing some pressure. So what does the valuation say to us? The price to earning ratio of this company is at 71 times, while the price to book value is at 13 times. While compared to the peer companies, the average valuation price to earning ratio stood at 90 times, whereas price to book value stood at 12 times. This says that the IPO is fully priced, which means that the valuation is at little higher side. Before we jump into the listing strategies, here are the some important things you need to know. So what does the analyst say? Most of the analysts whom I follow say that this IPO is fully priced, which means that it is little expensive. They also say that this valuation is justified considering the sector leading growth, top tier EBITDA margins and superior ROE and ROCE. Most of the institutional analysts assigned subscribe rating to this IPO, but raising a red flag on valuation. Industry experts expect a stellar debut of this IPO due to the robust demand, R&D capabilities and high profile global client relationship, but they have given the red flag on the valuations as well. So how did Anchor Invest react to this IPO? Anchor investors invested 1016 crores in this IPO. Some of the prominent anchor investors include PineBridge Global, Abu Dhabi Investment Authority, HDFC Mutual Fund, Motilal Oswal Mutual Fund, ICICI Mutual Fund, Axis Mutual Funds and many more. So this gives a strong feeling to all the retail investors that this IPO is so good. Let's talk about some of the risks you need to know before you come to a conclusion that whether to hold this IPO. Some of the key risks involved in these companies are high customer concentration. 71% of the revenue is flowing from top 5 customers. The IPO is fully OFS, offer for sale, which means that not a single rupee is flowing to the business. Regulatory concerns. Any failure to maintain or review the licenses could hinder the expansion. High import dependencies. 48% of the raw materials are procured from the overseas, mainly from China. Valuation risk. Though the current valuation is justified from the growth story, the future valuation is highly dependent on the future growth and quarterly results. The IPO is fully priced above sector average. It needs to sustain the future growth to justify the premium. So discussing all this, what makes this IPO a hold strategy for you? A good business model and financials, ROE, ROCE, revenue, EBITDA are excellent. India's push towards independency in API growth, growing industry and this company's unique placement to expand its market share. Other pharma companies outsourcing their R&D and manufacturing. What are the factors which makes this a sell on the listing day? As I said before, OFS, offer for sale, which means that no single money is flowing to the business. Valuation. Considering the broader pharma sector, the valuation is expensive and post listing at 20-25%, it makes it much more expensive. Net profit margin pressures are another concern. So let's come to the very interesting topic right now. GMP. What does the GMP says about this IPO? As of today evening 17th of July, the GMP was between 140 to 150, indicating a listing gain of 24 to 26%. If the market sustains this GMP, this IPO is going to have a stellar market debut, giving a listing gain of approximately 24% to 26% for all those those lucky allottees. If you have got one of the allotment, congratulations on that. So finally, here we are at the listing day strategy. This is my personal opinion. If this IPO is going to list at anywhere between 20 to 25%, it is better to offload 50% of your stakes. Invest that profits in mutual funds and grow your wealth. You can trail the remaining 50%, keeping the stop losses below the listing day low. And here is the strategy number 2 for those investors who thinks that this particular stock can move upwards much more. Then you can do this thing. Fix a stop loss at your desired minimum profits and trail the stop loss as the price moves upward. And if you are a long-term investor and bullish on this particular sector and understands the long-term conviction of this particular stock, then keep your stop loss at issue price and let the market decide on what to do with it. So if you are an investor who invested only for listing gains, then consider offloading all your investments on the listing day. Make the profits and invest in mutual funds. If you are confused where to invest and how to invest in mutual funds, consider following my WhatsApp channel, which gives you real-time market updates, which helps you to choose exact category of funds to invest for your long-term wealth creation. And if you are a person who are new to mutual funds and not knowing how to invest, consider applying for my mentorship program. All the links given in the description below. So I am Harshit Shetty signing off today. Will come with the new IPO analysis video soon. Till then, take care. Thank you for watching.